You try to burn me down, but my spirit just refine like a phoenix from the ash. Find my strength from within.
What's up, Hawk? Hey, Marcos. What's going on, dude? Frank, welcome to the stream. Good to see you guys. Hope everybody's doing good on this Monday afternoon, Monday evening. The dark side. What's up, Arks? On the stream. Dreading joining the dark side. What's the dark
Home, I'll carry you in my heart.
Oh yeah, it is St. Patrick's Day, huh?
I'll build again.
I don't know.
No,
I just am either working or sleeping. I don't know anything else.
And expand. I am stronger than before.
What is up, Electric Eddie? There we go.
Let it go. Rise, rise, rise.
Corned beef and cabbage.
Rise,
Brownies and intermittent fasting, brother. Health is a little rough, not gonna lie. I've been sleepy, dude. Like, I'm back to like sleeping at lunch. But I'm trying. We got I'm switching biologics soon. Hopefully that'll bring the energy levels back up. The psoriasis is good since I started the methylene blue though, so that's thanks for asking. What's up, Design? Doing good. Finished some work. I did a video today, so that'll come out, I guess, whenever the editor gets around to doing the thumbnail for it. Ben Wackin, what a name. What's going on, dude? Welcome to the stream. Hey, Integra guy. See you back, I haven't even looked at Kaspa. I assume it's the same as Lithium and Radeon right now. What's up, DJ? Global Executive Transportation. You need to put LLC at the end of that. Sick isn't good. Nah, we're going to talk about it. I'm just going to talk about it as candidly as I can today. We're going to get into it. Give my thoughts. There we go. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. Let's get that lighting up a little bit. Today, I did want to talk about a few things because obviously I've been super active on Twitter, and a few of the kind of things I've been observing and frankly just not that happy with, and I'll be completely honest. I think it's a difficult subject in general. Obviously, I'm an influencer. Obviously, there's a lot of stuff I think within the scene that I think needs to be at least addressed to a certain extent. And I think it is impacting the price of cryptocurrency and the adoption of cryptocurrency as well. I think it's a lot less with proof of work than it is with necessarily like maybe like proof of stake and tokens and all of that. But there is some healing going on that I'm going to address as well. That's really interesting. Frankly, the entire ecosystem of pump.fun is in the toilet, and I think that's all for the best, right? We have a really interesting article from Cointelegraph on US and Canada tariff flip-flops affecting Bitcoin miners. So we're going to take a look at that, as well as if you're a hosting company, Hawk's in here, I know. There was an article here from Cointelegraph about a case between Bitcoin mining hosts and their tenants. And I think that's going to be relevant to everybody involved. So seeing kind of what the current ruling is going to be in this particular case, which is essentially not being able to afford hosting bills, which I think a lot more people are going to be seeing more and more, right? Last week we talked about BitGen. I'll get into this when we get to the article, but we talked about BitGen, which is going to be Ice River and their hosting, etc. And I think that it's going to be really interesting to see where that heads. There was also an article from WhoSat Network on an issue with Bitcoin's proof of work. I want to give you guys my thoughts on that, because obviously when these things are coming out, it's really important to try to take a step back and look at what the reality of these situations are and how realistic, these vulnerabilities actually are or not, right? So I want to take a look at that. And then we're going to be taking a look at a new coin called Griffeon. It is actually a 100% fair launch, which is why I want to bring it up. And I think that obviously I'm a huge proponent of a fair launch. It's also going to be ProgPow, which means that it's going to be essentially, ASIC resistant, which I hope that we start seeing more and more of. I have some gaming news as well. We have a new launch for SteamOS, which is version 3.7. And there's a couple other gaming topics I want to talk about, as well as we're going to be reacting to, I had it in here. We were going to be reacting to Red Panda Mining's video on his Kaspa mining, because obviously that is something that has been impacting a lot of people in general. So the first thing I want to talk about was a post I put out on Twitter, and this is what I said. I said the cryptos that slowly bleed out are the most dangerous. This is because emotionally, it's not that bad to lose 1 to 5% of value in crypto, as people in the market are used to it with Bitcoin. However, year over year, the Bitcoin charts look much different than alts. The charts below represent a majority of alts this cycle. The thing that makes, and the two coins that are here in comparison to Bitcoin, which we can go over, I'm not saying anything is necessarily worse or better than another one. We could probably pull up any alt cryptocurrency at this point and have similar charts, which is like the year on just kind of bleeding out. Bitcoin, we had our traditional initial pump for the cycle. And by now, once you have that Bitcoin pullback, you expect to see previous all-times hit now. But these also are unique because these particular cryptocurrencies haven't been around for multiple cycles, right? So we're seeing something different here recently. And I just kind of, it got me thinking a lot about essentially what's been going on in the entire industry. And I thought these two were interesting because the tokenomics between Radeon and Lithium are quite a bit different. And then if you take into consideration something like Kaspa, they're way different, right? I did say it doesn't matter because they are effectively identical in price, and by price I mean their price trend, right? The tokenomics of any alternative cryptocurrency right now, regardless of what the tokenomics are, tend to have similar, if not identical, price action, right? So, Lithium's down 80% over the year, or 88% over the year, and Radeon's down 90% over the year. Now, obviously, their actual price is completely different because their price is directly related to the total amount of cryptocurrency. So you could say, obviously, a Lithium being at 33 cents and Radeon being at 0.2 of a cent, but the actual value and where it's headed is the same, right? So if you're trying to figure that out, that's just, obviously the more of something there is, the less it's going to be worth, just because there's more. It's a frankly just supply and demand. Now, I did say ASICs, but I do want to bring up that it's not just ASIC cryptocurrencies, right? So if we look at, say, something like, let's pull up Raven Coin, for example. What you'll see over the past year, frankly, not as bad. It's down 55% over the year, but GPU mineable coins are not necessarily immune to this either, to be completely clear. I think there is a higher impact on, say, ASIC cryptocurrencies over the year. But that can also, Kaspa's looking a lot better right now, but Kaspa's at 46%, closer to Raven Coin. And maybe that has to do with the specifically going to be, like I said, the tokenomics potentially, but we're still down, right, compared to Bitcoin. If you add any of these to a Bitcoin comparison chart, right, we're going down in general over the year, where Bitcoin is technically up over the year. And I think what's happened is that we have to be honest for proof of work, right? So this is kind of what I've been struggling with, and maybe you guys can help me out with this. With proof of work, we say, okay, well, proof of work is inherently better because we don't have these incentive structures that are, creating essentially what are effectively the possibility of scams. But what we're seeing with proof of work cryptocurrency now, it's not necessarily, I don't want to call it a straight up scam, right? But what I want to point out is that we have an industry that is incentivized to currently sell equipment. And a lot of that has to do with the fact that it's an influencer model now. So if you look at anything that gets adopted by influencers over time, and this started out in cryptocurrency without proof of work, all the way back in the 2016 cycle with things like BitConnect, etc., is you have people that are influencers that are directly incentivized to sell you a product, right? And what that creates is a demand to sell the product over a demand for the cryptocurrency itself. And that is affecting essentially the proof of work space, because what we've turned into now is essentially a bunch of tech YouTuber channels that are selling, mining equipment, and they're incentivized directly by the sales of the equipment. And I'm just as guilty of that in the past as anybody else. But I think that it's having a negative impact as a whole on the cryptocurrency industry. And I'm not so sure that we're headed in a proper direction, right? So things that get left behind are like fundamentals and the original reason for cryptocurrency to be in existence, right? So if we look at Bitcoin and its inception and what it's supposed to be, which is a peer-to-peer cashless system that, gets rid of the middlemen, we essentially now have an entire industry built off of middlemen with mining manufacturers, like mining equipment manufacturers. And so we've created this industry that is purely built off of just the supply and the demand of not only the cryptocurrency itself, but much more the hardware that's involved. And I'm struggling with it, and that's why I want to talk about it, because I don't think that it's really, I think at this point where we are hitting in the industry is we're hitting the gold rush portion of selling the shovels to mine the gold on the West Coast, and not actually the gold being there anymore. Like, we're not seeing the fruit of the labor of the cryptocurrency mining portion of it in general. So what I said is this scenario directly mimics the California gold rush. The industry has become a bunch of influencers that made money off of mining early on, selling you the dream of making it rich like they did. The hard part is that they are just as much victims as the viewers, which I did go on to clarify a little bit, but I said it's hard for me to sit back and look at this objectively, obviously, because I am an influencer. And I do think, though, that the industry is sick. And I think that I don't know how to necessarily fix it, because just like with everything in life, like everything's an incentive structure. And so you have to rebuild the incentive structure to fix the problem. And Bitcoin intentionally was set out to set up an incentive structure or incentive model that dissuaded people from being able to, obviously print more money than they actually have, creating value through scarcity, these sorts of things. But now it's very clear that that can be manipulated in the wrong direction. And I wanted to talk to the community about it, because I'm not sure how this gets resolved, right? So how do I put this? I don't think that there's anything inherently wrong with developing miners to mine cryptocurrency, right? I don't think that there's anything inherently wrong with, promoting miners to sell cryptocurrency. What I think is incorrect, though, is pretending like, everybody's going to get rich off of doing it, when that is clearly no longer the case, right? And I think we need to be completely honest about where we're at in the industry, which has been, now we've had 3 proof of work cryptocurrencies release over the bear market, where the entire intention of those cryptocurrencies appears to have been, or at least maybe not from the developers themselves, but at least turned into shovel selling cryptocurrencies, with Kaspa, Radeon, and Alephium being the most notable, right? And I don't think I'm coming out to basically say at this point, I don't think it's a good idea to be purchasing these ASIC miners. I think in general that if you are looking at getting into mining right now, there's a higher likelihood that the ASIC miner that you purchase will be a net negative for you, and not a net positive, right? I don't think that it's going to be something where everything moons at this point. And now we've talked, this is all backed up by the content that I've been creating here recently, surrounding, for example, the sheer number of tokens and availability of them on alternative networks, meaning that we have a flooded market, right? Which means that there's only so much liquidity that can go around. So the likelihood, at this point, it's become gambling. Frankly, at this point, mining cryptocurrency and purchasing ASIC miners has become straight up gambling. There used to be a time when you could, basically provide a service, provide that security to a network, be compensated. People would continue to work on those projects, and then essentially over time they would have some sort of value. But now there's just as high of a likelihood of a project being abandoned as there is a likelihood of that being continued, right? So, and actually being worth any money at the end of the day. And so when I sit back and I look at this completely objectively, and I want to try to, my goal has always been to essentially help other people be able to have some sort of financial independence. And in a lot of cases, I have been blinded, had my blinders on when I look at the industry, because I think, there's no issues with proof of work, because proof of work, you're providing a service to the network and you're getting compensated for that. But frankly, because of the way that they're getting churned and burned and the amount of networks being released, it's becoming extremely difficult to navigate the space. And it is becoming a lot closer to gambling than it is to actually providing a service and getting payment back, if that makes sense. So we're all playing essentially, the slot machine, as Ark says, and I'm not comfortable pretending like that's not what's happening. Okay. There are things that can make you more or less successful, right? And the fact of the matter is that the things that make you more or less successful is your position in the industry. Okay. So if you are an ASIC manufacturer, you have a significant advantage. If you are an influencer that is selling the equipment and obviously they want to work with you, you have a significant advantage. But if you're just getting into the space right now and trying to say, okay, I'm going to purchase something and I'm going to utilize that to make a living or to gain some financial advantage, you need to understand that the industry is structured in a manner to where you don't have, you're at a massive disadvantage at this point, right? And the thing is like the competition's too high. The current arena surrounding especially ASIC miners outside of Script and SHA-256, which even those, it depends, but outside of those is not really dissimilar from insiders on a token based release, right? So it moves a lot slower, but it is still effectively the same thing. And it's something that's been bugging me a lot. I stay up late at night thinking about these things and what is the right thing to do ethically surrounding this. And I think that talking about it is going to be the best thing. And where I really struggle, I think personally with this is, I think that, how do I put this? I don't necessarily think like every ASIC manufacturer and every influencer is evil or is malicious, but because of the nature of the incentive structure surrounding it, it's inevitable, right? Now, do I think there are some people that are doing it intentionally? Sure. I think that's definitely something that people are going to see that possibility and say, hey, I can make money. And obviously money, there's a reason why there's the saying, money is the root of all evil, because it does put ethical and moral blinders on individuals. I think a great example is the Pi network, where it's quite obviously a pyramid scheme. It's multi-level marketing. Your phones aren't actually doing any solid proof of work when you're participating on that network, but because the incentive is there, people put on the blinders and they move into it and they act like there's no problem with it when there is a clear problem with it, right? And frankly, it's like it's getting to the point to where I don't even know if I'm comfortable working in this space, because the thing is like, if I want to be successful as a content creator, my job would be, right, or as a as an influencer, my job would be pretend everything's fine, call Gold Shell, call Ice River, take their units, show you guys how much money it makes in the first week, tell you to use my promo code, sell you something that I'm not even positive is going to be a good financial incentive. And then when you lose money, be like, well, I said it was not financial advice. Right. What you're seeing from me right now on Twitter, right here, right now, is effectively like just a crisis of ethics, right? I don't, and the hard part is like people want me to call out individuals. I'm not going to do that. Do I think there are people, you know, that are doing things they shouldn't be doing? Yes. Do I think that they are necessarily fully aware and malicious? No, I don't. And I'm not, everybody has their own lines that they won't cross, their own, you know, they all have their own morals and ethics. I don't have to agree with them, and I can talk to you guys about them, and that's fine, but I also don't have to, like, I don't have to necessarily be like, I think I do get frustrated to the point to where I have called people out. I don't know how I feel about that. That's a whole other issue as far as like, you know, I think it's difficult. I mean, like, it's like I've clearly had, like, you guys have probably seen on Twitter, I've had conversations with people where they're like, well, you don't work well with people and all that sort of thing. And I get that perspective, and people are just trying to run their businesses and be profitable and do what they can. I just don't know that I can do this anymore in this manner. Like, I'm fine with testing GPUs, getting hash rates, talking about news, doing that sort of stuff, but I do not think I am comfortable in the least at promoting any of these shitcoin ASICs at all. I don't know that I'm even comfortable saying that those projects are viable or good, because I think that they're having a negative impact on the crypto industry as a whole. Now, Be More Stupid says if crypto starts pumping, you'll forget all about it. I don't think so, because crypto pumped before and I didn't forget about ASICs being a problem. So you could say that. I do get blinded, and when it does pump, I think we all do. And I think that it's fair to say that from a certain perspective, and I have made those mistakes in the past. But I am coming to the realization that we are getting to the point to where I don't think a lot of the layer 1 proof of work ASIC only cryptocurrencies are going to pump to a point to where they create financial prosperity for everybody that purchases one, right? Couldn't we transition our resources more from crypto mining to AI? I mean, there's a lot of discussion surrounding that. And I don't think that, I think that obviously if we're talking about, so, I think that's a good question, but then you're also talking about GPU mineable cryptocurrencies. And when you take out a third party, by effectively having a piece of equipment that can do multiple tasks, you take out a majority of this issue. Mike Y says, you mad that the Pi network is legit? No, I don't think it's legit. It's just a matter of time. Like, do we really have to go over this over and over again? I mean, like, let's go look at Pi right now, right? What is their FDV? Fully diluted value is 134.76 billion. Current is 9.32 billion. That's clearly a scam. Like, it's not even a question. Like, I don't even know why I have to put up with you idiots saying stupid shit like this. I'm so over it. Like, it's not even a question, dude. I mean, you put that up against anything in here. That means that, like, look at this. Like, we're talking about that being above Tether. Do you really think that Pi's value is above Tether? It's not. It's just not, dude. It's just, frankly, it's not. It's on the level. And when this comes crashing down like they always inevitably do, I mean, I really hope it's not. I really hope that it's worth 134 billion and nobody gets hurt. But I'm not going to sit here and pretend like I can look at these numbers and say, no, use my promo code to participate in this. There's no way, dude. Not to mention, it goes against everything that anybody in crypto stands behind. It's KYC'd. It's essentially just data farming. Like, there's so much wrong with it, it's not even funny. So no, I'm not going to pretend and say like, oh, because right now the coin hasn't collapsed. Well, why hasn't it collapsed? Because the max supply is not even close. The coin value is based off of only 9.3 billion being available in the market when there's 134 in total supply. I don't think in general all of this is going in the right direction. I have to be honest about it. I'm not comfortable with it. I'm not comfortable with selling ASICs to people. I'm not comfortable with the amount of questionable practices within any of the industry. I'm just not. And I have to be honest about it. Now, I think everything's going to go up here soon. So if you're like, oh, well, he's completely out and everything, I think that you're going to still have the benefits of Bitcoin. I still think it's a Trojan horse. I still think that we still have the next 8 to 10 months for us to recover and go into a bull run. I think the halving cycle's there. I still think the fundamentals for Bitcoin is there. I still think that there are plenty of good projects. I think that there's innovation in the market. I think that BlockDAG for Kaspa was innovative, and I think that's a net positive. I think that, I think that there will be good GPU mineable projects that rise to the top, and I think that they will be relevant, and I think that they'll be something that you want to pay attention to. And I think that there is good stuff within crypto. But what I'm saying is, by and large, the things that are getting promoted and the possibility of you actually building a crypto mining business off of a lot of these projects is extremely low. And to pretend like it isn't, I think would be a problem for me, right? Lately, it just feels like everyone who loves crypto and mining is giving up because of all the meme coins and scam coins that are being released. I think no, so I think obviously the meme coins, etc., are damaging from the fact of it pulls the liquidity away from valid projects, right? So what happens is um effectively, because we have way too many projects or way too many options for people to dump liquidity in, which are basically getting siphoned right back out into fiat, right? For the most part, that you don't, because there's so many options, it's turned into a casino, right? um because there's way too many things for people to put their money into, you effectively turn it into a casino. Everybody's going to give up to, so this, as far as the total market being down, that is healthy. So that's normal. That has to happen because you essentially have to get rid of all the trash, right? And things have to rise to the top. That's every industry, right? That's the internet bubble. That is everything that has been around. Where we're at right now is that kind of huge bubble where there are a ton of projects vying for for the total market liquidity, and there's a lot more that are invalid than there are valid, right? So no, YouTube says it would be nice if miners were holding coins instead of auto dumping into Bitcoin or USDT. The thing is so there's a huge flaw there with the thinking. The miners should be able to sell, because in a healthy market, you would essentially have a demand for the tokens. So the question is why is there no demand, right? And the reason there's no demand is because the only use case for that particular coin, whatever it may be, is purely to make money. It's fiat returns. Right. JazzCat says that all demand is on Solana. There are too many coins. Hawk is right. I brought this up like a month ago, right? We have too many coins available. So let's talk about that though, because what we're seeing is a correction on all of this. So let's get to a little bit of the positive. How about that? So Pump.fun meme coins are dying at a record rate. Less than 1% survive. And this is kind of like my point. Everything's turning into essentially a casino. The meme coin frenzy on Pump.fun is hitting a wall, with the platform's graduation rate sinking below 1% for a fourth straight week. Graduation rate is the meme coin launchpad's term for tokens that make it through the incubation phase and become fully tradable on a Solana decentralized exchange. To graduate, a token must meet specific liquidity and trading requirements. I bit my tongue, so give me a second while I mumble through this. Over the past 4 weeks, starting February 17th, Pump.fun's graduation has remained below 1% for the first time, Dune Analytics data shows. Pump.fun's graduation rate has never been particularly high. The platform's best performing week was November 24th, when 1.67% of meme coins moved onto the open market. However, the sheer volume of tokens launched on the platform at the time made this percentage more significant than it is now. So not only are we seeing a decrease in the graduation number, but in the total number of tokens being launched. During the week, starting November 11th, 323,000 tokens were created on Pump.Fun, meaning the 1.67% graduation rate translated to roughly 5,400 tokens entering Solana's DeFi economy in a single week. With token creation volume declining on both Pump.Fun and Solana, weekly token graduations have plummeted to a 4-week average around 1,500 tokens at the time of writing, according to Dune. Pump.Fun's dropping graduation rate reflects the waning investor appetite for meme coins, which have developed a reputation as degenerate lottery tickets or quick cash grabs for their creators. Several political figures have launched their own meme coins as well, including U.S. President Donald Trump. His token is down 84% from its all-time high set on January 19th, according to CoinGecko. Meme coin struggles persist despite improving liquidity, according to Matrix Port. So here's the other interesting thing to point out here, and it goes to back up what I've been talking about, which is that we do have more liquidity coming into the market, but it's getting sucked up. So even though liquidity is increasing, the total, like each individual project is performing worse because we are essentially sucking it up with just the sheer amount of options in the market, right? Since then, the US dollar has weakened. Over the past month, the US dollar index, which measures the dollar against a basket of major currencies, peaked at 107.61 on February 28th before dropping to 103.95 on March 14th. The US dollar has recently weakened, leading to a rebound in liquidity indicators and some marginal improvements in inflation data. Despite these positive shifts, meme coins, previously one of the strongest narratives during this bull market, continue to struggle significantly with no apparent recovery, Matrix Port said in its report. The struggling meme coin market has contributed to a $1 trillion wipeout in crypto market capitalization, according to Matrix Port. This redistribution of wealth may lead investors to remain cautious about deploying further capital, causing rebounds, even those triggered by better than expected inflation data to be limited, the report noted. Matrix Port analysts warn that this could lead to further Bitcoin declines with potential retracement as low as 73,000, a level they would believe would provide strong support. Now, the reasoning behind this is kind of interesting, right? People aren't pulling out of meme coins into Bitcoin anymore. And this is something you should pay attention to. So in previous markets, you always had a tie between Bitcoin and every single cryptocurrency available. But like we talked about last week, the move in cryptocurrency recently has been outside of centralized exchanges and into Phantom Wallet directly. And this move also means that people have faster access to offboarding their cryptocurrency from Phantom Wallet directly into their bank accounts, which means they're going to essentially straight into the dollar. And due to the fact that the primary goal of a lot of these meme coin creators is to increase their fiat wallets, they're pulling straight out. So their liquidity is not going back into Bitcoin. So I think there is a strong argument for, specifically the liquidity of essentially everything that's going into the Solana ecosystem not translating back into Bitcoin. So I think it will have a negative impact across the entire board for cryptocurrency because you don't have that strong tie between Bitcoin and the rest of the market like you have had in previous cycles. I think that is also the reason why you are not seeing a traditional cycle in the altcoin space. And another thing to note here when we're talking about mining in particular, especially mining alternative cryptocurrencies, is previously when people were investing into cryptocurrency, they would send everything off to a centralized exchange. That's why large centralized exchange listings were important. And if they wanted to play around with an altcoin, they would take it out of their Bitcoin in the centralized exchange, put it in something on the CEX, CEX. And then that is why you would see the cycle bounce between essentially the crypto market or the Bitcoin price and then the alternative cryptocurrency price. But because Solana has pretty much taken over the entire alternative cryptocurrency market, and because there are direct on and off boarding options on the Phantom wallet, and the Phantom wallet has surpassed any other cryptocurrency application download on iOS and Android, there is not going to be this direct correlation, which means if you are mining other alternative cryptocurrencies that are layer ones, they have zero visibility to the rest of the market, which means your Radeon, your Kaspas, your Raven coins, all of these things have zero visibility to a majority of the liquidity within cryptocurrency right now. Because people aren't on those platforms. People aren't on ZegX, much less, right? They're not on even Coinbase or Binance. They're literally downloading the Phantom wallet, gambling on meme coins, meme tokens, and then offboarding back to their fiat currency. That's what's happening, right? So then the question is, will we see, the same level of rise in the alternative cryptocurrencies that we saw in previous cycles? Will there be something that saves GPU mining specifically? And the answer to that might actually be no. So a rising tide raises all ships, but not on all shores, right? So the shore is moved. Does that make sense? The good news here is, though, that people are slowly moving out of the meme coin market. I think enough people have lost enough money, but the negative sentiment is obviously something that's going to have to be combated in general. Let's talk about tariffs. So US-Canada tariff flip-flops have Bitcoin miners on their toes. US President Donald Trump's I don't even know this. Let me I'm a dummy. I always love it when they get all fancy. Shrewdness, swiftness, thievishness. The god Mercury. Okay. Anyways, the god Mercury has shifted the business landscape for Bitcoin miners. Bitcoin miners are adapting their business strategies as the continued trade war between the US and Canada makes energy prices and policies all the more uncertain. US President Donald Trump threatened to double his tariffs on steel and aluminum from 25% to 50%, leading the government of the province of Ontario to walk back its own plan to increase the cost of power exports to the US. Ontario Premier Doug Ford had promised to further increase the surcharge or even shut off the electricity completely, given further provocation. However, he appears to have softened his stance, at least for now. The trade war may have reached a lull, but some crypto firms are looking ahead to possible policy changes in order to protect their growth. Ben Gannon, the CEO of Canadian Bitcoin mining firms Bitfarms, told Bloomberg on March 11th that the recent energy price hikes, had they gone through, were unlikely to affect his firm's business. Bitfarms operations are mostly in Quebec and British Columbia, both of which boast significant hydroelectricity capacity in relation to the total provincial energy mix. Ontario, by comparison, is not as robust of an energy market, and over the last several years, they've really taken a big push on cutting back on base load capacity. But even through Bitfarms' energy situation, or even though Bitfarms' energy situation may look solid for the time being, Gannon said the tariffs have implications for what policy and regulatory frameworks are going to look like in the future. He said that his firm wants to see greater access to electricity markets, as well as fewer regulations on setting up new business or new power applications. Energy policy has been a contentious area of debate in Canadian politics, with critics accusing the Liberal government, now led by Prime Minister Mark Carney, of harming the Canadian economy with their strategies to lower emissions. Gannon said, quote, "The opportunities that are present in the United States are also present in Canada, and I think this will resolve itself and end up in a much more deregulated and smooth and efficient market, because for years it's been tied up in regulatory red tape." Tariffs on goods such as steel, aluminum, and other industrial products intended to encourage domestic production in the U.S. also impact Bitcoin miners, with some effects being unexpectedly beneficial. While Gannon noted that miners can control the Bitcoin price, they can control their electricity costs. One of the ways that we can do that is we can look for pockets of energy that are underutilized, that used to power heavy industry, dear Lord, excuse me, which has been outsourced to other countries over the past 20 or 30 years. According to Gannon, Bitfarms has operations in Pennsylvania, a Rust Belt state, heavily affected by the outsourcing of American steel and metals industries. His firm's assets could soon be in high demand if the U.S. manufacturing industry were to come back from the dead. Gannon said that Bitcoin miners have been investing heavily in energy infrastructure that used to power aluminum smelters and steel refineries, and the stuff which was outsourced. Now Bitcoin miners have these assets, and as the pendulum swings back to America, those assets are now in high demand. Canadian miners like Bitfarms may be unconcerned for now, but Trump's tariffs on China have already begun to squeeze American crypto miners who import hardware from China-based firms like Bitmain. According to Bloomberg, shipments of Bitcoin mining hardware from China to the US were experiencing significant delays as of February 2025. Let me reload this. Still alive? There we go. Reload this too. Boom. We are having technical difficulties, but there we go. So heavy custom fees for inspections of Bitmain affiliated hardware have cost U.S. miners up to $500,000, according to Vishnu. I can't say that name, but the director of global logistics and services at Compass Mining Incorporated. New tariffs could make new imports of next-gen miners to the U.S. completely cost prohibitive, according to Syntech Digital CEO Taras Kulik. Now, here's my question, because obviously, people that could talk to this better would be obviously Hawk in chat, who's saying that yes, orders are delayed now. This does pose a really interesting problem, I think, to the U.S. I think it is a security issue as well, because we've talked about before, the total hash rate for Bitcoin will be something that is a competitive advantage for a country. So you really want to incentivize this, and the manufacturing of all the silicon for ASIC miners being in China is a pretty big deal. I think this is what we definitely have exposed as a weakness for the US is the lack of silicon manufacturing by and large. And I think it will be really important that we have some competition in the US from a manufacturing perspective. But on top of that, when we're talking about cryptocurrency in general or mining Bitcoin in general, I still do think it's a very valid strategy to be stacking up on older mining hardware that is in the US specifically for Bitcoin, right? Because we've already talked about the ASIC issues with other cryptocurrencies. But if you're looking at a strategy here, if these tariffs do continue to impact, new miners coming into the US, et cetera, it's obviously going to drive up the price of everything that's already here. And that's just a basic supply and demand scenario. Now, if these things change and we see a shift in the pendulum surrounding the trade war and tariffs between China and the United States, I think that could change, but I don't see any significant manufacturing changes taking place at this time. I think it would take way too long to get fabs up stateside to start manufacturing, on a serious level. That is the ultimate goal, but when we're talking about Bitcoin, I don't even know if that's fast enough, right? Because obviously the hash power race is going to be within the next, I think we have 4 to 12 years left, right? And after that, we really get to the point to where mining is just going off of essentially fees, and that fee parity will happen, and it'll all come down to essentially what we're seeing. And I think we're seeing an accelerated rate of this on Kaspa, but we'll see the price of Bitcoin more and more be less affected by mining than it is now, right? So if you look at Kaspa, for example, and how quickly the emissions have gotten to where 90% of it is in circulation already, the influence of the cost to mint Kaspa becomes less and less. And the reason for that is because the people that are holding the Kaspa are no longer reliant on the cost to mint, right? And this is where you have a significant supply and demand problem for miners in general, because the supply is no longer coming from the miners themselves. And this will eventually happen to Bitcoin as well. Now, what I've said before is that, when does the halving cycle stop? It happens, the halving cycle and traditional effect on price stops when fees on Bitcoin meet parity with block reward, right? At that point, you would have it essentially stabilize as far as price goes in relation specifically to the halving schedule. But it does bring into question if that will play out. And looking to Kaspa as an example of that, which I have been doing, I'm not so certain that the price of Bitcoin will be fully or be impacted by miners at all once that parity happens, because all of the supply will already be in circulation. Therefore, the price is directly influenced by people that have no tie to the cost to mint, right? And it's something I think about a lot. I don't know which direction that goes. I mean, I can tell you when it will no longer have as much of an impact on price, but I don't know exactly what that will look like, right? China-based mining hardware producers like Bitmain could set up operations in other countries to avoid U.S. sanctions. During Trump's first term, when he imposed a 25% tax duty on a number of consumer electronics goods from China, many mining hardware producers moved to Malaysia, Indonesia, and Thailand to avoid tariffs. I know the FPGA manufacturer Osprey has a lot of manufacturing done in Vietnam. And I think there's fabs there. I don't know for ASICs if it would move there too, but that's just something of note. Bitmain even announced it would launch a U.S. production line in December of 2024 to provide faster response times and more efficient services to North American customers. Bloomberg noted that the firm did not provide the exact location of its U.S. line. Trump's economic policies continue to be a mixed bag for the crypto industry. Wild fluctuations in trade policy and last-minute reversals have made the market difficult to predict. Elsewhere, the European Union has promised to impose counter tariffs on the U.S., further threatening asset valuations. The co-founder and chief operating officer of blockchain Oracle solution firm Redstone told CoinGraph this could see Bitcoin sink to 75,000, a level not seen since November of 2024. Now, I don't know that this would affect price negatively on Bitcoin, tariffs in general. A lot of people draw correlations between the price of Bitcoin and macroeconomic factors. And in the past, at least historically, it's still played out to the halving cycle, right? And I don't know if we're really necessarily outside of the halving cycle. To know that we're out of it, I'd have to see what happens in the next 10 months to know for sure, right? So that's kind of where I'm at with it. I think it's still kind of sit back and wait and see what happens. I think the effect of, the supply and demand on stateside hash power does pose potential benefits to the cost or the price or the valuation of older hardware, right? At the end of the day. Now, this one's interesting, and maybe we can hear from Mr. Hawk on this one. Court says Bitcoin mining host can't block tenant access to its rigs. So, if you guys aren't familiar, there's hosts that basically you can send your miners off to, and then pay them usually a cost per kilowatt hour. And in return, they run your rigs, in some cases maintain them, depending on how much you're paying them, etc. And then you get the Bitcoin, you pay the bill with it. Obviously, this big downturn was a massively negative impact on miners, especially miners that were hosting equipment. We covered this last week with essentially, I think actually 2 weeks ago, because we're starting to see, we saw a big dip in the Kaspa hash rate, and that was due to a lot of the contracts, at least for a little bit, ending on the Ice River hosting side of things. It came back online. There were probably some deals worked out between the people that own the rigs in Ice River. There could have been maintenance. There's a lot of stuff that could go on, but the idea is like, obviously, if you are, working with a hosting company, there is that potential that you're not profitable. Your hosting bill ends up being more than you actually made, and you get to a point where you can't afford the bill anymore. And then you can end up in a position like this. It's definitely a position I would hate to be in. I'm always worried about being in this position, right? Because I do have my mining rigs hosted right now, but let's get into it. A Delaware court has granted temporary reprieve to a Pennsylvania Bitcoin mining firm currently in a payment dispute with its hosting company, barring the hosting provider from blocking access and otherwise commandeering the miners' 21,000 rigs at the property. Vice Chancellor Morgan Zern granted a temporary restraining order on March 12th, requested by Bitcoin miner Consensus Co-location and systems owner Stone Ridge Ventures against Mawson Hosting, which provides hosting and co-location services for Bitcoin miners. The firms have been in disagreement over alleged unpaid fees, the terms of their agreement and Consensus plan to relocate, allegedly leading to Mawson blocking the miners' personnel from accessing the site. The firms also alleged Mawson has been operating the rig since February 28th for their own gain after preventing Consensus from entering the premises. Mawson, however, claims they are allowed to use the rigs under the terms of its agreement with Consensus, and they have the right of first refusal for its relocation plans. The Bitcoin miner has been seeking injunctive relief to regain control of their equipment and prevent Mawson from using them. As part of the March 12th order, Mawson is barred from using the hash rate from the miners and will no longer be allowed to restrict Consensus's digital and physical access to the rigs in Midland, Pennsylvania facility. Now, I come from the auto industry originally. If you guys don't know, I was a motorcycle mechanic. And this one's kind of interesting to me because this does go against what I would assume is the case. And there's probably more details to this that makes it a little bit more nuanced than maybe I'm seeing on the face level. But if you're a mechanic, for example, right? And I'm going to read what Hawk says here too. Just from my perspective, if you're a mechanic, what you can do in the case that you have a client that doesn't pay is you can essentially file a lien on the vehicle itself, and then it's called a mechanic's lien, and you take possession of that vehicle and you sell it to cover costs that were not paid for. I would assume as a host you would have that same legal right. Now, Hawk is saying certain companies will mine on machines if the customer doesn't pay. They do this to maintain power requirements. At Terra, we don't do that. It gets sticky with finances. I know companies that do that. Now, that is a thing to bring up. A lot of hosting companies have requirements with their power cooperatives or companies to maintain a certain power level to get the costs down. And so they will put something in there that basically stops them from doing that. So there's two things going on here. One is, of course, actually utilizing the equipment that isn't yours to perform a service to a network effectively, right? But number two, there is the actual recovery of the cost to run the rigs that was not paid by the miners to the host, right? So they're at a loss for that. Obviously, this will have to get settled legally, but this actually goes out. I would have thought personally that this would have been more akin to what you see with mechanics liens, and it appears that that's not what's happening here. So it says that the temporary restraining order is in force until the matter can be heard in a preliminary injunction hearing. A company spokesperson for Mawson told Cointelegraph the company was pleased with the outcome, looked forward to Consensus abiding by their contractual obligations and continuing to work with Consensus. Mawson Infrastructure Group and Consensus co-location did not immediately respond to Cointelegraph's request for comment. So this is how it began. In March 6th, in a March 6th legal complaint, lawyers acting for Consensus accused Mawson of mining Bitcoin with their rigs valued at $30 million since February 28th, generating daily profits of between $100,000 and $200,000 while blocking access to them both physically and through VPN access. Consensus and Stone Ridge signed a co-location agreement with Mawson in December of 2023. They agreed to terminate the partnership by the end of March 2025 with a gradual reduction in capacity leading up to the deadline and a removal process scheduled to begin on March 3rd. Mawson argues that it was owed fees and electricity prepayments for February and March, and its co-location agreement gives it the right to redirect the hash rate of Consensus miners and use the proceeds to replenish the deposit. On its face, it was operative only prior to April 1st, 2024, and only in narrow circumstances relating to the replenishment of a deposit, lawyers acting for Consensus said in the suit. When Mawson began redirecting the hash rate on February 28th, the deposit was fully paid, and in any event, Mawson has stolen hash rate worth many times more than $17,505, Mawson claims. Without jurisdiction, that consensus owes its purported late fees. It's really, really tricky, and I always say, like, not your hash, not your power, because I think, I think there are, how do I put it? There's good intentions, I think, with a lot of hosting companies. But when you're dealing with this much money and there's a lot of people involved, things can go awry really, really quickly. I had to finish up a settlement with my previous host already, and that was a big pain in the butt. And it's not a fun thing to go through. It costs a lot of money. You lose a lot of money. I've lost, probably 40 grand just on that one alone. And that doesn't include lawyer fees and all of that. Right. And so when you're talking about like picking a good host, make sure you pick one that you know and you trust, obviously. I try to stay away from like recommending hosts because I don't want to be liable for any of that. It's not like a personal thing. It's just it's a tricky business, and there's a lot on the face there, or a lot that's not on the face there, right? A lot behind the scenes that's going on, and each individual situation is going to be different depending on how many rigs you have, what the efficiency of the rigs are, what the power cost to the host is, what their costs to operate are going to be. All of that sort of stuff is going to come into play, right? And I think that in an extremely volatile market like Bitcoin mining, it can go bad really, really quickly. And so it can be extremely difficult to say like who's in the right and who's in the wrong here. It's really, I think at the end of the day, like if you're putting, it's hard because if you're putting, so if they didn't pay, but then they mined and made up the fees and then they continue to run the miners, they're putting wear and tear on the machines that could be utilized to resell, to make the money back, to settle whatever dispute there is, right? And so I think putting a pause on them running the miners is probably the right play if you're looking at this from a legal perspective. Because if you're running it, it's just like putting miles on a car, you're devaluing that miner, right? Well, AFC, you say contracts, but they clearly do have a contract here saying they're allowed to run them and remove access. And the judge has ruled against that, right? So however this ends up playing out at the end of the day is going to set a precedent within hosting in the States, right? Yeah, and Hawk says they personally just pause them and don't run them for that reason. The question is, of course, like obviously if you have that, is that viable for every host or is it not, right? But I would assume that the way you would want to run it, if you could, would be to pause the mining, put a lien on the miners, and then take possession of the miners legally through that realm, because there's already precedent set there from the auto industry, right? So I think as a host, that's how you would want to function, just because there is, like I said, precedent set there already, right? Yeah, you have to have the lean time, says JazzCat. Apparently, I guess, saying that the miners were redirected immediately. I don't know that they were redirected immediately necessarily. So Bitcoin's proof of work is the backbone of its security. This is an article by Husat saying that the integrity flaw, or that there's an integrity flaw in Bitcoin's proof of work. I wanted to bring this up because people kept, a lot of people are tweeting about who sat lately. And then obviously this is an accusation of, against the integrity of Bitcoin. I want to give you guys my thoughts on it, but it says Bitcoin's proof of work is the backbone of its security, a mechanism designed to ensure miners expend real computational effort to secure the network. But what if the effort could be faked? For a while now, he says he's been digging into the subtle yet critical issue with Bitcoin's proof of work validation, the potential for not spamming. For those of you not aware, instead of actually doing the work, essentially you can provide a bunch of solutions, random solutions to, say, like a Bitcoin mining, or to a Bitcoin node, or to a mining pool, which then can relay that to a node. And if it's correct, it doesn't actually verify that any work was done. So that's the whole idea behind this. The problem with this actually saying that this is an issue is that due to the difficulty on pretty much any network, and you're basically running a random number generator, and the likelihood of it happening is extremely low, right? So it says it isn't about the efficiency of gaming a network hashing at over 900 exahash. It's about the integrity of the system itself. And it says that they're going to break it down here. So in Bitcoin, miners submit their work at 2 key points directly to a node via a submit block RPC call, or through a mining pool using a Stratum protocol's mining submit call. That's what I said earlier, right? So when a miner submits a block to a Bitcoin node, they provide a hex encoded block hash through the submit block RPC call, and it gives you the data that's included. The node takes this data, computes the proof of work hash, and checks if it meets the difficulty target. If it does, the block is validated and propagated across the network. The catch is that the node doesn't verify whether the miner actually performed the computational work to find the nonce. It only checks if the submitted data is valid. A miner could, in theory, spam nonces without crunching the numbers and hope one sticks. There's no cryptographic proof that the work was done, just a result that passes the test. Bitcoin's nonce field is famously limited to 32 bits, offering a search space of 0 to whatever this number is. What is it, 4 trillion? Let's see. No. 4,294,967,000. What the heck? My controller fell. There we go. So that's by design baked into the protocol, and changing it would require a hard fork. So the second entry point is through the mining pools, which use the Stratum protocol. Here, miners submit work with fields like, and they give you that. And there's an extra nonce. Yes, I see it, the extra nonce 2, and its pool providing sibling, extra nonce 1, expands the search space beyond the 32-bit nonce. But how does this fit into the puzzle? To understand that, we need to look at the Coinbase transaction. So every Bitcoin block starts with a Coinbase transaction. The one that mints new coins as the block reward plus transaction fees. Unlike regular transactions, it doesn't spend existing inputs. Instead, it has a single input with a script sig field, which isn't executed like a typical script. It's just data up to 100 bytes that gets hashed into the block. So miners append extra nonce 1 and 2 to the Coinbase transaction script sig. This script sig is serialized and hashed to produce the Coinbase transaction hash. That hash is combined with the other transaction hashes to compute the Merkle root. And the Merkle root hash is then fed to the block header, which is hashed with the nonce to produce the final proof of work hash. The script sig is flexible. Its only constraints are the size and the bit 34. It must start with a block height, leaving the rest for arbitrary data. Miners and pools use this wiggle room to include extra nonces, effectively expanding the search space without altering the 32-bit nonce field. It's a clever workaround, but it doesn't solve the core issue. So the argument here is that whether submitted via submit block or mining.submit, The system trusts that miners have brute forced the nonces space to find a valid hash, but there's no mechanism to enforce this. A miner could spam random nonces or even pre-computed ones, and if one happens to work, the network accepts it. The extra nonce helps pools coordinate work distribution and increase the search space, but it doesn't prove computation either. This isn't a hypothetical attack vector, it's a design limitation. At 900 exahash a second, the odds of non-spamming succeeding are astronomically low, but that's not the point. The point is trust. Bitcoin security rests on the assumption that miners are doing the work, yet the protocol can't verify it beyond checking the output. In a system built to eliminate blind trust, that's a crack in the foundation, is what they argue. Now, I don't think this is as serious. Like, obviously for Bitcoin, not a big deal. I think the argument is for basically smaller networks like Husat, for example, right? Bitcoin's proof of work isn't just about preventing double spends. It's about ensuring a decentralized network stays honest through computational cost. If that cost can be bypassed, even theoretically, it undermines the system's integrity. So it says, can it be fixed? Essentially, they're saying, the cost to mint is directly related to actual work being done, which I do understand that point of view. And I think it's a lot easier to just do the work than try to spam random nonces, unless you got to the point to where you have quantum computing, which in that case, we already have that problem of quantum computing in general, right? So could this be fixed? Maybe with a redesign of how proof of work is proven, but that's a tall order for a protocol set in stone until now. So it says that Husat has a breakthrough solution that addresses this flaw by introducing a verifiable mechanism to ensure miners can't fake their work. Patent application registered in both the EU and US, HTN enhances proof of work integrity by requiring miners to submit the actual proof of work hash for validation in the whole network, making non-spamming detectable and impractical. It's a game changer that provides innovation and can shore up Bitcoin's foundations without breaking them. For now, Bitcoin's sheer scale and economic incentives keep it decently secure, and HTN fix bolsters that resilience, especially for slow CPU, GPU mineable proof of work algorithm coins. Now, if you recall, we had been seeing that not spamming had been happening on smaller networks. So I think that it's a valid concern on smaller networks. Now, I obviously disagree with, in general, patenting something like this. I think it should be open source, but, it's like I said, this industry's gotten extremely sick, and unfortunately, developers will utilize this to capitalize or promote the price of their own cryptocurrency. It's crazy that we went from something like Bitcoin, where the primary developer's Bitcoin wallet has never been touched. It wasn't done for financial gain, and it was done to fix something, to now every single little piece of cryptocurrency that anybody finds any innovation within wants to keep it to themselves and make money off of it. I don't know. With Q-Day, the moment quantum computers could break cryptographic algorithms like SHA-256 drawing closer, these design quirks take on new urgency. A quantum leap in computing power might not just threaten Bitcoin's encryption, it could amplify vulnerabilities like non-spamming. Specifically, Grover's algorithm, a quantum algorithm that provides a quadratic speedup for unstructured search problems, could slash the time needed to find a valid nonce from brute force efforts. While not an immediate death knell for proof of work, it shrinks the computational gap, making it feasible to game the system at scale without solutions like HTN in place. As we push the boundaries of what Bitcoin can do, we need to wrestle with these uncomfortable truths about its design. Integrity isn't just about what works today, it's about what holds up tomorrow, especially when quantum threats like Grover's algorithm loom on the horizon. Thanks to HTN, that tomorrow looks a lot more secure. I'll let them, obviously, I thought this was an interesting subject. Is it a risk? Like, if I look at this, do I say, like, is this a risk on 99% of the networks out? Probably. I mean, well, maybe actually, I guess I should say on any of the large networks. No. But in general, I don't think that, I don't think that it's a big deal with Bitcoin, right? I think maybe if you wanted to implement it on smaller proof of work cryptocurrencies, that's okay. Um, I don't know enough to say like if what their solution is works. So that's kind of where I'm at with it. And Daniel, welcome to the chat. Artist Satoshi says it's a WhoSat ad. Yes, that is true. I did want to bring it up though because I think the interesting idea is that in theory you could, I think it will take quantum computing to be relevant, right? Because you have to spam at an extremely high rate. Will people do it? Sure. But it would be effectively like running, like it would be effectively running a lotto miner, right? Which is what it is, which I have no um no love for the lotto miners in general. I think you just lose money, personally. So if you guys don't know me, I mean, you probably do at this point. I'll just say it. I'm a gamer. I love video games. I hate crypto and gaming. I despise it. I despise every aspect of it. I think that the gaming space has gotten worse and worse as it's been further and further monetized. I think that basically kids being excited for a skin in a video game that they paid real money for is just a shame. It's destroyed, I think, the actual sense of achievement in video games. You know, used to, you'd run around in World of Warcraft or Diablo, you'd see someone with some really nice gear, you'd be like, that's sick. You had to actually get good at the game. And now kids just buy whatever they want. They throw the skin on, and the gaming industry makes a bunch of money for as little effort as possible. And I think that that is what people are trying to do with cryptocurrency in gaming, with the NFT marketplace, and I'm not a big fan of it. I just want to pay one price for my game. I think a good spot for crypto and gaming would be, you know, give me an NFT that proves I have permanent ownership over the game for its entire lifespan, for my entire lifespan. I can move that NFT over to my kids and pass the game down. Something along those lines I could see a spot in, but unfortunately, that's not really the direction we're going. But now they're saying over here on CoinDesk that blockbuster games, AAA games, which I think are dying extremely quickly here as of late, we'll get into that maybe in a different one, are going to be built on modular app chains. Mainnets like Ethereum's aren't suitable for major AAA games development. The only real solution is horizontally scalable blockchains coupled with modularity and gas-free experience for end users. So I wanted to cover this because I want to see where this is going in the future. I'm not a big fan, but let's see. The AAA gaming space is absolutely massive. To put it into context, it is bigger than the movie and music industry combined, almost 300% bigger. These stories are better and stronger, and the overall experience is more satisfying and enriching. A great example of this is GTA 6. I'm going to say it right now. I think GTA 6 will be a woke failure. That's what I'm going to say. It's going to be a woke failure. I looked at the devs of that game. They don't look like the original devs. I don't think GTA 6 is going to be good at all. That's just my opinion. I think it's going to be a trash game. I think it's going to be on the level of Dragon Age, in my humble opinion. I think it's going to be a massive failure, and I think Rockstar stock is going to collapse. That's what I think. And if they add NFTs into it, just compound that by like 1,000, right? So it says, take Bethesda game studios, for instance. The amount of developers behind each game has increased 266% between Fallout 4 and Starfield, from AAA console games with huge budgets to massive mobile phone virality. There's parallel growth in the esports industry and the accompanying revolution in content consumption led by streamers across YouTube and Twitch. The esports audience has risen to over 640 million, an over 140% increase since 2019. Gaming's entertainment versatility swallows all mediums. Implementing Web3 technology into the stack would transform the AAA economic model, opening up the marketplaces to a global audience of gamers and enthusiasts who watch more than play and want to participate in the economy. Game companies will not only be able to monetize their walled garden, but also every global NFT marketplace. The biggest complaint in gaming right now, period, is the walled garden. So if your goal in Web3 is to monetize the walled garden, I don't think it will be successful. Anybody paying attention to the gaming space right now knows that the most successful games have been what? Right? They've been Elden Ring, where you buy the game, you get everything in the game. They've been Baldur's Gate 3, same thing. You buy the game, you get everything in the game. A lot of Eastern titles now are blowing up, like Black Myth Wukong. I think that if you are thinking this is a good place for the NFT marketplace and this will be good for crypto, I think you aren't paying attention to the industry. I think you don't know what the fuck is going on, and you are going to go bankrupt faster than Ubisoft is on a path to go bankrupt right now. I honestly think that, and I think trying to implement gaming and NFTs together in this form is not going to play out well. I just don't think the gaming audience wants this, and I think it will be a massive failure. Frankly, I think it'll just die. And you know what they'll blame it on, just like they're already blaming it on? They're saying it's due to technical complexity and UX friction. So user experience friction and scaling issues. I think those will all be issues, but I don't think that's the reason people will not like it. I think that when it fails, they're going to say, well, it was because it was difficult to use. It won't be, no, the audience just doesn't want this trash. I don't want to buy I don't want to be pinged every 2 seconds to buy something. It's an annoying way to play a game. It just is. Like, it's so crazy that people think this will be a good thing for crypto. This will put a massive negative light on cryptocurrency, because every single gamer will hate it to its core and will be so frustrated that whenever they see cryptocurrency, it will be like retail looking at pump.fun. And they will remember cryptocurrency for getting into their games and ruining it. It'll just be a bad idea. Crypto should not do this. People shouldn't do it. I just don't think they should. And, well, that's a good point. So AFCO says leave that crap on mobile. And to be fair, that is where you could put it. Put the Web3 gaming on mobile. You know? So this says obviously that ETH mainnet could not do this. We already know that. What's coming out? We talked about it before. Mega ETH, make Ethereum great again. The most centralized platform on Ethereum to come. That will be what they try to put. That will be kind of what's necessary for this type of thing. In general, I'm just super mad that they're trying to do this at all. I don't know. I can't even get through the article because I'm like, if this shows up in my games, I'm going to throw the biggest fit. I'm just going to throw the biggest fit. I can't help it. It makes me mad. I'm tired of everybody trying to suck my money away in every single aspect of life for crap that I don't need and don't fucking want. Here's what it should be if you want to do it. I think so we saw the Sui play. Yeah. So we talked about this a while ago. If you do I opened this up and it made my whole computer crash. So we're going to close that. Not crash, but get really slow. They are mining or something on there. But if you do a game, if you do an NFT marketplace on Steam, for example, and when I buy the game, I get an NFT that proves my ownership of the game, and I can transfer that NFT between accounts and buy and sell and trade games. I think I'm cool with that. If I can have NFT ownership over the item in the game that I can also earn in the game, maybe there's a fee tied to that. I'm cool with that. I'm great. That works for me. There are ways you could implement it that make sense. But the way they want to do this, right off the bat, is we want to, monetize it all. And we already know from what the gaming industry has done that it's going to be cosmetic items that you can only purchase in the store, and it's going to be annoying. Sweet Play, so advanced they run Flash Player on their website. Yeah, just turn it off. It's a terrible website. I don't even think the Sweet Play is going to be that good. I think the marketplace idea is the most interesting part about it. I did want to watch this really quickly. So this is the type of thing crypto came to stop, and I hope it stops it, but we'll have to see. Apparently, Elon Musk is saying that there are magic money computers in the U.S. government. So I wanted to hear what he said here. I thought it would be funny.
One of the things...
And this is on a podcast with Ted Cruz, which I don't know why everybody and their mom has a podcast now, but I guess that's the way it goes. I saw California governor started his new podcast. I'm like, damn, we're just going to have a bunch of celebrities running around as public officials. It's just kind of, I guess that's always been the case, right? Like the Reagans, all that sort of stuff. Anyways, it's hard not to be cynical these days, huh? Gavin Newsom. Yeah. Gavin Newsom. He's trying to flip. Obviously it's so obvious what he's trying to do. And it's smart to do because it is clear that, on the trans issue, as far as the trans issue where it's men and women's sports is an 80-20 issue that the left was pretending was a 50-50 issue. And if you're on the left and want any support at all, you just need to admit that and join the other side, right? We got Red Panda in chat saying GPU mining is dead. Sell me your GPUs. I can't sell my GPUs. Not happening, bro. I got 30 over here. All new. All right. Let's listen to this though. I wanted to hear what he said. So apparently there's money makers,
You told me about
it's crazy.
Is what you
it's
call
insane.
Magic money computers at the Treasury.
Well,
so tell us about it, because I never heard of that until you brought that up.
Okay, so you may think that the government computers all talk to each other, they synchronize, they add up what funds are going somewhere, and it's it's coherent. There's and that the numbers, for example, that you're presented as a senator, are actually the real numbers.
One would think.
One would think. They're not.
Yeah.
Okay. They're not totally wrong, but they're probably off by 5% or 10% in some cases. So I call a magic money computer any computer which can just make money out of thin air.
Mm-hmm.
That's magic money.
So how does that work?
It just issues payments.
And you said there's something like 11 of these computers at Treasury that are sending out trillions.
I mean, we knew
in
this
payments?
though, right?
They're mostly at Treasury. Some are, but there's some at HHS. Some at there's one.
You have access to my farm. Can you turn it back on for me? Because I don't even have access to it because it's not on.
There's some at DoD. I think we found now 14 magic money computers.
14. Okay.
They just send money out of nothing.
Send money out of nothing. So here's what I think is going to happen. Like, obviously this has been in talks for a while, and I think that we are witnessing essentially, so there's not supposed to be a central bank digital currency, but I think that as this stuff comes to light, I think that discussion is going to be brought back up. And that executive order will change, or it will be framed in a way that says, well, Ripple, I think it's going to be Ripple now. I'm starting to feel like that because of the tweets that Musk has sent out and the way they've talked about it. I think they're going to say it's not a central bank digital currency. It's a third party, but we're going to use that blockchain technology to track everything. I think that's how it's going to be proposed. But at the end of the day, I guess it's not really any different because XRP is kind of a magic money machine. Anyways, I thought it was a funny thing. I don't know. Like, we already knew it. It's not like I feel like everybody's just telling us everything we already knew, right? At the end of the day. There's a new GPU mineable coin. I think Red Panda's trying to buy all your GPUs to mine this new coin. It's called Griffeon. It's a community-driven crypto. Fair launch, no pre-mine. This is one of the first fair launch, no pre-mines I've seen in a while, so I wanted to give it a little attention. It's a community-driven cryptocurrency, blah, blah, blah. Stop saying community-driven. I don't give a shit about your community. Shut the fuck up. Yeah, it's a good community. No! No! I don't want a good community. I want a good blockchain. Damn it. Anyways, it's a robust blockchain, fair mining, and has real utility. Apparently, we'll see if it does. 100% fair launch, so good in my book as far as that goes. No pre-mine tokens, fantastic. No ICO, awesome. No dev tax, awesome. I haven't seen one of these in forever, and I keep getting these fools like, well, it costs, why would I work for free? I don't know. Get a real job and stop trying to take money from miners, dude. I'm sorry. Like, in what world did we wake up in where, like, crypto turned into, I deserve to be paid for creating a blockchain? Like, I know, I get it, okay, fine. Maybe I'm being too hard on the issue, but that's not how it started. So how did it end up here? I'm so confused. I'm going to go back to Satoshi's wallet. None of the Bitcoins moved out of it. There's no dev fee. Nobody's making money off of it on the development team. So why are you trying to convince me that every single blockchain needs to make money for developers? I don't understand it. I don't get it. Because, like, the entire point was to remove all that stuff, dude. It was supposed to, the whole point was to remove all that crap. Remove that third-party financial benefit. That was the whole point. I just don't I just don't get it. I don't get it. I'm just, ugh. I have a lot of triggers, AFC. The whole episode's been trigger after trigger. Look, I'm just not holding back anymore. I don't get it. But anyways, there is one now. This is the first one I've seen in a while. But to be frank, like all this stuff, it always reads the same. It's like strong community, it's decentralized, and this is going to be ASIC resistant on Kapow. We did learn that it was the floating point units that makes Kapow extremely difficult to build FPGAs and ASICs for, which I thought was cool to learn. I mean, we kind of already knew that, but that's kind of what I got from Osprey. There's a fixed supply of 11 billion that will ever exist. And it says the block rewards are designed for long-term stability. I've talked about this before. I am worried about like the short-term fast emission projects like Kaspa running out of an incentive to mine and then losing all of the security. And I think that when you're coming out with a blockchain, it is important to take that into consideration because you need some sort of incentive to maintain security on the network. The halving schedule is Epoch 1, 5,000. I don't even know how long the epochs are. So they tell me this, but I guess we need to go look and see how long the epochs are. I do have the website here. Over here somewhere. Yeah. Let's see if it... So the block halving 1 is at 1 million. Well, what are the block times then? I need to know the block times. Let's see. Where's the Explorer? Explorer. Nine. So 2 minutes. 5 minutes. 3 minutes. How long are the block times? 25 seconds. Wait, if the block times are 25 seconds and the first halving is at, you guys are going to help me out, right? 3 million. Wouldn't that happen really, really fast? Like, $250,000 seconds. No, this can't be right. 4,166 minutes. 69 hours. 2 days. Doesn't make any sense. 5,000 times 25. There we go. That makes more sense. Where do they list this? Am I missing this somewhere? It's not listed here. That makes more sense. So then do 5,000 times this. That seems really long. That'd be like years. 40 years. Can't be that long. My math's way off. I have no idea how these tokenomics work right now. You're going to have to let me sit down and talk to someone. 289 days is what Quersima says, or Jazzcat says, is the first halving cycle. They should list that somewhere on the website or something. You know? Or on the Bitcoin talk thread. because they don't have it here. It is listed on an exchange I've never heard of called rabid-rabbit.org, by the way. Affiliate link in the chat. Just kidding. I haven't even opened an account. But there's I guess we can look at the fees. Check out the fees. Withdrawal fee 1 to 10 USDT. So there you go. Seems like every other place. Expensive. It says rabbit.org. It's a real one, dude. Retro's, I never know if Retro's just gonna troll though. He says, I've used Rabbit. It's an okay altcoin exchange, similar to what an altcoin alt markets was. Okay. So there you go. Retro says it's safe. Blame him if you get hacked or lose money. Don't leave any money in exchange. Stop doing that. I don't know how many times we got to say that. It's like I've been doing this for over 10 years now. I'm tired of saying it. Retro says I'm being serious. I believe you. I'll believe you. Highest fees. Yeah, I was going to say 1 to 10 USDT. With a 5 to 10,000. It looks like it's a $10,000 withdrawal limit. Non-KYC though? That's good, right? So you only use it if the coin isn't on TradeOgre or ZegX. Man. ZegX just had a massive hack and TradeOgre stole everybody's Kaspa and you chose this third to it? I don't know. I don't know if that's a glowing review. That might not be a glowing review. I'm just saying. Bullish. Oh, that's funny, dude. We already covered 9070 XT mining hash rates previously, but Serpent XSF released his testing over on Reddit. Link down in the description. I haven't gone over all of these yet, so go check them out. But apparently ProgPow 39 mega hash a second at 238 watts was the best, apparently. I think. Oh, no. Look, 41 mega hash a second. He didn't put these in order at all. 222 watts. There you go. 41 mega hash a second. Looks like is the best. SRB miner and Ironfish. So fish hash is showing 24 mega hash a second at 126 watts. Oh, this is ProgPow Z. My bad. That's KY Jelly over there. Actual Kapow or ProgPow is 26 mega hash a second at 177 watts. And then Ergo at 74 mega hash a second at 134 watts. And ETC hash is 43 mega hash a second at 138 watts. 9070 XT and 9070 not that impressive for mining. I think it's just buy the 6800 XT for Kapow. Or 6600s, right? Depending on how dense you want to get. What's up, D-Miners? Welcome to the stream. Valve has released SteamOS 3.7.0 preview and offers support to non-SteamDeck handhelds and Plasma 6 for Linux desktop-like experience. I haven't installed this. I've been utilizing Bazite.gg, which is a Fedora version and has SteamOS-like experience on it. I don't know if this will work on the desktops yet. I assume with AMD hardware it will, so I kind of want to check it out. But the preview is out, and it came out for Pi Day, and they released their release notes for it, and the general notes are they updated to a newer Arch Linux base with the Linux kernel going up to 6.1. And they updated the Mesa drivers base. The desktop mode now ships with Plasma 6.2.5, and they are now starting to support non-Steam Deck handhelds. I will say it right now, this is the precursor to SteamOS being allowed to be installed on any desktop PC. And that is going to significantly change the gaming space, I think, as a whole. Now, we talked about Microsoft releasing, of course, their handheld competitor, and Game Pass is going to be a big deal because it does obviously take the Netflix form. But what I've noticed is that none of the games on Game Pass that are coming out are really noteworthy. They've been going downhill very quickly, a lot faster than the movies and television did on Netflix. Where, you know, Obsidian had some pretty strong releases early on. And then it really went downhill with Avowed. And I think that because there's not an incentive, everything comes down to incentives, right? Because there's not an incentive structure for them to sell copies because it's just a subscription based and they get paid the same no matter what from Microsoft, we're getting worse and worse products for any developers that are working under Microsoft now. And I think that that's going to play out in Steam's favor because Steam has been getting, you know, all the kind of good games, right? I mean, it's got the Black Myth Wukong, it's got Baldur's Gate 3 on it. You know, you buy the games, they have massive amounts of people playing them. I think Monster Hunter Wilds here just basically destroyed everything in player count over the past week. What's even more impressive about that is right off the bat, it worked on Steam OS. Worked on Linux right out of the box. It's crazy, dude. And I really think the handheld, it was the proper strategy by far. It's crazy because the handhelds just got, the install base is growing drastically. And now that they're going to just let other handhelds install them on it, and that's going to remove the Microsoft licensing fee, I think you'll start seeing other handhelds come with SteamOS. And then eventually I think you'll see them release it and say, hey, you can install it on your desktop PC now, free of charge. And then I think you're going to start seeing it come from, you know, gaming system OEMs. Have I played the deck yet? Yeah, I have two decks. I have the LCD and the OLED. I was just, I did this. Here, I'll show you. I haven't finished it, but I was modding my LCD. I'm pretty close, but I was modding my LCD to the purple. I messed up one of the ribbons for the LEDs, not the LED screen, but the LED, like it lights up. But my first Game Boy Color was this purple, so I wanted to put it in the purple. But yeah, Oh, have I played Monster Hunter Wilds? Yes, I have. It doesn't work as well on the Steam Deck. I got it over like 40 frames a second now with the latest update, but it doesn't work fantastic. As far as like, I'd rather play it on PC, right? It's just a little bit better. I'm going to take a bio break real quick, and then we are going to get into some video reactions. We're going to be reacting to Red Panda Mining, talking about Kaspa, because I know all of y'all will enjoy that. But give me 1 second. You ever have one of those peas where you're like, I feel like it should have ended by now, but it just keeps going? It just keeps going, dude. All right, so I thought you guys would like me reacting to this. I mean, everybody already knows I said don't buy Kaspa ASICs. So I'm not surprised by any of this. All right. But let's see what Red Panda has to say. See if I was right or wrong. Could be wrong.
Arpim here. Hope you're doing well. Having a really great day.
Let me know the levels for you guys.
To update you all on the 5 KS5 miners, or the
5
KS5
of them,
Ls and KS5Ms that I have accumulated.
Okay, money bags. Just go 5 KS. Oh yeah, okay.
Since around July and August of 2024, so about 8 months ago. And I have been mining and hodling Kaspa since then. Okay, I want to update you guys on how much we've mined in total and giving you the numbers. Okay, how much electricity I've been using with all these miners since I've been mining and hodling over the past 243 days. You know, how much the bag is worth and, you know, cost basis. You know, what if I sold every day? We're going to talk about it. All this in this video, and the main reason why I made this video,
I'll watch your video if I want to, Red.
The new Kaspa miners that were just announced from Ice River, the KS7 Lite and the KS7. Okay, and I'm just going to tell you right now, I do not recommend buying these miners, and they're just way too expensive for what they are.
But if you want to buy them, check out his affiliate link in the description below.
Currently earning right now, and they shouldn't be these prices. So, but anyways, I'll give you more of my opinion and a bunch of other things I want to talk about in this video. Okay, so I'll do that right after a word from today's sponsor, because I'm definitely going to need this sponsor after this. Luxor's ASIC Shop, your one-stop destination for all
Luxor.
All your Bitcoin mining needs. For those of you who don't know, Luxor has been a trusted name in the mining industry for years. They've moved hundreds.
I've interviewed Nick Hansen and Ethan Vera on the channel multiple times, as well as no, just those two. So if you want to check those out, I've interviewed them multiple times. Nice guys, but
hundreds of thousands of ASICs for institutional buyers. Now they're bringing that expertise to retail miners like us through their new ASIC shop. Only need 1 unit? No problem. They've streamlined the process for small orders because no order size is too small.
I can watch people's sponsors because that's how they get their channels paid for. And I don't have any sponsors. So you don't have to watch them multiple times. So I feel like if you only have to watch it once, it's not that bad.
Bitcoin mining parts, they have it all readily available and shipping from their Montana warehouse for fast shipping domestically or to
I love Luxor's hash price index. It's super awesome.
31 international countries. Use discount code REDPANDA for $100 off orders over 3,000 at checkout. Luxor's ASIC shop, making Bitcoin mining easy, profitable, and accessible for everyone. Link down below.
Got that music going on.
So before I talk about my numbers of the 5 KS5 miners that I've been mining with over the past 8 months, just quickly, okay, the new ice server KS7, KS7 Lite that were announced, these are basically a little bit more efficient, you know, marginally more efficient than the KS5 Pros, okay? The KS7, though, does about 10,000 more gigahash or 10 terahash more than the KS5 Pro, KS5s. So yeah, but the power consumption is around 3,500 watts, they said. So like, you know, the efficiency there is about 0.11. Okay. So yeah, they're selling these for about 5,000. I just, it's a terrible price right now. The profitability on these things is like, you know, $4 a day at my 7 cents electric. So
and that's with them not shipped,
I mean,
or
these
what?
things are making like $2 a day or something. So honestly, it's not a good buy. It really is not a good buy at these prices right now. I truly think that in the next, I don't know, week or two, maybe longer, or I don't know when they're shipping these out. I didn't really check on their website. Let's see here, KS7 Lite. Resale will start 9 a.m. Eastern, March 7th. Oh, that's today, I guess, when you guys will see this video. But yeah, the price is not good. I think the price should be a lot cheaper, like, I don't know, $300 for these KS7 lights, and the KS7 should be like, I don't know, at most $1,800. I don't know. It's, yeah, these things are not going to be making a lot, especially if, you know, a lot of the hash rate seems to be, the hash rate's quite high, or, you know, it could go higher, but
ice server's going public.
happen is a lot of people that have these other miners, okay, are essentially going to be turning off. A lot of the older ones, though, maybe a lot of people that have free power, you know, have these other models. But yeah, my KS5Ms, KS5Ls are in the negative, you know, in terms of profitability at my 74 cents electric. Okay, so my KS5L, single KS5L, I'm using $1.72 a day. KS5M losing about 64 cents.
Yeah, I
day.
covered it.
Okay,
DJ Mines, I should have the video up on the channel, but they went public over under, what was it, BitGo or BitGen? So they went public under that in the US. Yeah. So they're stateside public funding or public company now, primarily for the hosting side of things.
So that's a good segue into the numbers of my Kaspa miners. Okay, so I have 5 of these. Okay, one of the KS5Ls, I think like half a year ago, one of the hash boards died. Okay, so yeah, it's only showing 7.7 terahash here. So anyways,
I can't help it, Red Panda. I was already planning on this.
Yeah, I have 2 KS5Ms and 2 other KS5Ls, so a total of 5 different units here. But when I got these, okay, I got these from, you know, various resellers, and in total, the value of all these things were about $30,000 USD. So yeah, I have been doing this whole mine and hodl test because I wanted to see, you know, when will we break even on these miners? Okay, so it's been about 8 months, okay, 243 days or so. I think July 6th is the first day, the first time I got a payout on with Kaspa. Okay, so I'm not lying to you guys here. I'm using Coinly. It is a tax software that I use. I can, you can actually add Kaspa here. They finally added Kaspa, I think a couple months ago. You can put in your Kaspa address here, and you can tag them as mining and import. It will automatically import all the transactions for
you. Pay taxes
for you, and it's great. This is great for taxes, and this is how I'm going to be showing you guys. But anyways, yeah, so July 6th was the first time I started mining with the KS5L, and I started getting the other models, Kaspa models here over time. I have one of them hosted, and I'm going to be shortly turning off that hosting because it's at 8 cents per kilowatt hour. So that's, yeah, I'll explain that all later. If I'm going to be turning all this off or not, I'll explain that later on. So here we are. Okay, so the transactions, just to show you guys here, yeah, you know, I've been getting them in $100 Kaspa payouts here. And then I think I slowly changed it to 1,000 Kaspa payout as I got more of the miners later on. But anyways, okay, I haven't moved any Kaspa from this wallet. It has been constantly, I'm not going to lie to you guys. I don't care. You get
so you're not even paying power
total,
out of it?
95,891 Kaspa in total. Value is $72.58. Okay, $7,258. All right. So it's, yeah, you guys are going to love this. Okay. You're going to love this. So all the Kaspa that's been hitting my wallet here, okay, just to explain this this tax software I'm using here. So you can see my cost basis. So cost basis means all the crypto that has gone into my wallet at the time. So when it hits my wallet, okay, and depending on the price of Kaspa, that is going to be my cost basis. Okay, so if you look at my transactions here, for example, okay, let's just go from the beginning. You can see, right, July 6th, 100 Kaspa at that time, when Kaspa was 17 cents, that was about a $17.32 transaction. Okay, so when that hit my wallet, that is my initial cost basis. So that is actually my income.
Well, you don't have to worry about paying taxes on any of this.
On that. So accumulatively, just,
at least you're going to have to start having the CRA pay you, Red.
Everything together, right, as all my transaction cost basis together, I'm not going to go through all of it, but yeah, it's total. My cost base is about $14,065 since July 6th.
Yep, file that loss.
March 6th as of now. Okay, so that would be my income. But since I have been mining and holding, all of this Kaspa, all right, the balance, right, is now worth $7,284, and this is in USD. I forgot to mention. So you can see my ROI here. All right, you can see the difference. I am in the red, right? Pretty much my bag here that I've been
in Canada, you don't over the course of the past, sell, right?
8 months.
Or do you have to pay? Or do you have to pay income on day of mining like stateside?
48%. Okay. And if I sold everything right now, okay, if I sold this bag of 96,000 Kaspa, or if I sold into USD, $7,284, I would have a loss, or I have a capital loss here of $6,781 if I sold the Kaspa now. Am I going?
So you have to pay. Oh.
Gonna sell the Kaspa now.
Well, at least you got good sponsorships, and you get a lot of YouTube views. So I mean,
definitely not. Okay, I'm at this point. I'm gonna be holding it all the way to either 0 or up until further price appreciation, which we all know. Kaspa has been really, really depressing over the past. Over the past year, it's been going down realistically, but it's been pretty much averaging between 10 and 20 cents. But now we're going below that. Okay, we're at 7 cents now. I mean, the market's been it's been down essentially. Bitcoin and everything, altcoins have been bleeding quite hard recently, so it makes sense. So I'm going to wait for hopefully better times. If there's no better times coming for Kaspa and everything just goes to, a penny or 2 cents, then yeah, that's it. This test is dead. The $30,000 that we initially invested, theoretically, okay, thank you to the resellers, but anyone who, bought into Kaspa miners at the same time during August or...
Just thank you to the resellers. Stop buying ASICs.
For July and may have done the mining and hodl method, you are losing out currently, unfortunately. But for anyone that sold Kaspa, okay, here's another strategy. Okay, so I've been doing the whole mining and hodl strategy, but for anyone who's been doing the mine and selling everyday strategy, it actually would have been better off, okay, as of right now, after 243 days for me. If I sold every time the Kaspa went into my wallet, okay, the cost basis, you guys can see, $14,000, right? I should have, in theory, actually sold the Kaspa every day, and it would have been better than if I just mined and...
Dude, you're just not gonna, the fact of the matter is on Kaspa, it's too small of a coin with too fast of emissions for anybody to compete with Marathon Digital.
And held as of now.
You're not going to compete with Marathon Digital on your cost basis, or not cost basis, but on your cost to mint. You're just not.
As of
Like, that's what it is. It's a player versus player game, and Marathon Digital is going to absolutely stomp you.
now, that is. Okay, and what I mean by that is, what if Kaspa went to like 40 cents? Okay, so in order for so here's the whole strategy of mine and hodl, right? Here's the other side of it, is that what if I mine and held, right? Which I've been doing. So if I sold, let's say 96,000 Kaspa at, let's say if Kaspa went to 40 cents, that would be about $38,400. Okay, so that would give me my initial, theoretical investment of 30,000 back, plus the electricity. Okay, I forgot to explain, over the past 243 days, all right, I've been spending. Okay, let's do the math here. So about 3,400 watts per KS5L, so KS5M. Let's just say 5 times 5. So it's going to be about 17 kilowatts. Okay, so if I did 17 times 0.074, my 74 electricity USD, then that's about $1.25 or $1.26 an hour. All right, if I times this by 24 hours, that's $30.20. I've been spending $30.20 over the past 243 days, okay, per day. If I times this by 243, okay, that means I spent a total of $7,366.65 on electricity, out of pocket, mind you, okay, out of pocket for all of my miners here, okay? So we've come full circle, basically, in terms of how much electricity I have been mining with and have paid out of pocket, and then how much Kaspa I've mined and held to this point in time. Okay, I've actually spent more in electric than what my Kaspa bag is worth now. Okay, let that sink in. All right, 72.84 versus 73.36. So I'm in the red, not only am I in the red of the $30,000 initial investment on the miners, but I am in the red as well in the electricity that I have been using to mine out of pocket, to mine and hold and yield the Kaspa over the past 8 months. So that would be, because I haven't sold the Kaspa yet, plus I just do this, plus 30,000, right? So I'd be in the red right now, $37,336, basically, okay? And if I sold the Kaspa that I have here, I'd get 72.84 roughly. So I'm in the red a little bit more than what I first started initially.
So why wouldn't you what? So the way I do it, and this is for the Bitcoin mining, and I just don't I'm just curious. I mean, I think you're doing it for content, but why? So the way I do it is I mine. If it's at a loss, I don't sell. If it's in a profit on the day I'm mining, and I see that it's in a profit and it shows my profit loss report or whatever, I sell all of the Bitcoin that I've mined up to that point for that period at that profit. And then I just take whatever's left over and I hold that. And that's what I do with my Bitcoin miners. So if I don't turn the miners off, but I don't sell on that day, and I don't just continue to hold. Just a test. Well, I mean, there's no reason to be, I don't know. I mean, okay, you probably make more money from the content, I guess, maybe. I don't know.
$30,052. And another, give some context, right? $30,000, right? If I, instead of initially buying the miners, I could have bought the Kaspa. And I think during this time,
too much of a risk for me, too rich for my blood.
August, I think the average price of Kaspa was let's just say 16 cents. Okay, so what if I just bought, $30,000 of Kaspa divided by 16 cents? That would give me 187,000.
Yeah, but you have to sell it on time, and nobody does. As soon as it hits 20 cents, everybody's it's going to $1.
500 Kaspa. All right. So as of right now, that would be, that would have definitely been better than my.
But bruh, Can't just be losing money all over the place.
Mining and buying Kaspa miners at this point in time, because I've mined 95,891 Kaspa, but I have 187,000. I could have had 187,500 Kaspa simply just by buying the Kaspa. Okay, so this shows, right, with the aggressive mission schedule with Kaspa right now, I think we are at 61.74 Kaspa block reward per second. Okay.
Have you guys heard the conspiracy that like Kaspa from the very get-go was a shovel selling scam? Sometimes I believe it, because like as fast as the emissions were, it's like nobody has been doing the calculations to see that this is a terrible idea when they look at mining calculators. Because everybody goes to the mining calculator and then they're like, oh, this looks really good. And then they don't look at the emissions. And like, sometimes I'm like, maybe this is really just a brilliant shovel selling scam at the end of the day. Because nobody pays attention to how fast the emissions were. I was having this conversation like a year and a half ago on how fast the emissions were and how it couldn't keep up. But like, I feel like because like, I don't think people compute how quick they were. Like, I think it's hard mentally to go, oh no, this is going to go away really quick. Red Panda says there was a blog post on a previous VP of Bitmain who invested and joined Kaspa in the beginning, and that blog post was removed about 2 years ago. Well, they had that huge investment in, like, originally it was a mining venture, right? Like, they were going to create a blockchain and the miners for the blockchain, but then there's that weird $8 million investment thing that kind of went nowhere. But like, sometimes when people say that, because I'm like, I don't know, seems crazy. And obviously I'm putting on the tinfoil hat, but like, it is true that people are, so Bitmain and Ice River are selling the miners at a price that looks reasonable for the profitability of that day. And people don't realize that that profitability is not decreasing. It's just not on the, it's not even close to the same scale as Bitcoin. It's like accelerated like 100-fold, right?
It's per second, which I believe they're going to, they're on the testnet for Crescendo right now. And I believe it is working on testnet. So they're going to be running that out in the next 2 months. Who knows if that's going to have some price appreciation or, you know, bullishness of Kaspa. I don't know, but there's a lot of things happening with Kaspa. And so anyways, the Kaspa network hash rate has essentially, you know, exploded over the past year. We all know that. So yeah, I would never have been able to mine. Okay, at this point in time where I am mining, let's see, how much am I mining a day? I'm mining 253 Kaspa a day right now. Okay, and that's getting worse and worse and worse. Okay, the rewards or my payouts, you know, have essentially, it's kind of tapered off, but it's getting worse.
Yeah, I remember mining like 800 Kaspa a second. And that was like 2 years ago. It's not even that long ago. 800 Kaspa a second with one GPU rig.
And worse as the the Kaspa emission schedule gets, you know, worse and worse.
Holy
and as
shit.
more and more of the hash rate. We're at 61 right now, so it's, you know, it's gonna get worse and worse over the next year here. I will never be able to mine the amount of Kaspa that I could have simply just bought because of the aggressive mission schedule, because of how many people have gotten into Kaspa. The Kaspa network hash rate is, you know, tripled, right? So it's yeah, this test I'd say is not looking good.
Yeah, I don't
for
allow
those,
links. Sorry.
that have bought
You can
Kaspa miners.
shoot it over on Twitter. I
So
guess.
this is really gonna tie into
on Twitter.
my call out to everybody. I really truly believe that, you know, buying these miners KS7 Lite, KS7 is not a good buy. Okay, it's you won't get your money back. All right, it's better to just buy the Kaspa at this point in time. And you know, Kaspa is really the only coin I've ever said about buying, because of how aggressive the emission schedule is, because of how many people have gotten.
But like, that's why I don't invest in Kaspa at all. Because you mine, you don't buy. And mining Kaspa is useless at this point since it went ASICs. I think that's why I made that video, right? Like, I'm done with Kaspa. I am a miner, I don't buy, and there's no reason to mine Kaspa.
Into it, the network hash rate difficulty has risen, like 4 or 5x over the
just
past,
let Marathon Digital do it
8
all.
months. So the only saving grace here for Kaspa is that the price has to go up, and it hasn't been. I mean, I'm still bullish on crypto in general. Okay, I'm hoping that altcoin season, everything comes back into play. But as of right now, right where we are in the market, where Kaspa is, it's not looking too good. This chart, unfortunately, it doesn't look too great. But crypto is volatile. Things could change at any point in time. And this Kaspa that I'm holding, which, you know, I'm still gonna hold, I'm gonna see if it plays out.
Good luck.
Okay, I'm gonna see if this will play out or not. Let me know down below if any of you guys are in the same. I mean, you should, in theory, be in the same situation as me if you were mining and holding, that is. But if you were mining and selling, you've obviously been doing a lot better, because the cost basis was a lot higher. Because when Kaspa was, you know, 20 cents, 16 cents, 17 cents over the past 8 months, you were doing better if you sold. Okay. So anyways, I'm going to see if this plays out. Let me know your guys' thoughts. I don't recommend buying the KS7 Lites or KS7s, any Kaspa miners for that matter, because it's just not worth it. It truly is not worth it. Okay. All right. I'll see you on the next video. Let me know your thoughts.
Sweet. There you go. Make sure you guys go like the video. Thanks for letting me react to it. Red Panda. Make sure you guys are subbed over there too, and use his affiliate links or whatever. But don't buy any A6 for shit coins. Just stop it. We're all getting bamboozled by the shitcoin ASICs. Let's just stop. If we don't buy them, they'll stop doing it. Didn't ask me. Look, it's public. It's public. I was gonna watch. You guys want to watch a funny video? I figured after watching the Red Panda, we would watch the video about America's biggest cuck. Have you guys seen Bill Burr losing his mind lately? I don't know. Watched the Red Panda mining video and it just reminded me of this. I don't know why.
America's biggest.
Let's watch it. I want to watch it. America's biggest.
Bill Burr. America's biggest cock.
This guy sieg-tiled twice. This guy comes in and gives a shout.
Has anybody else been extremely confused about the sieg? Like, even if you don't like Elon Musk, to say there was a Sieg Heil is so intellectually disingenuous. I don't even know how to respond to you. I don't know. Like, I don't know if you're that retarded or if you were just literally that big of a lying sack of shit. Like, I don't know which one you are, so I just don't reply. It's crazy to me. Like, it's not even that. Like, it's not like it doesn't look anything like it. One. Two, like it does, like it, there's no, clearly not what the words were coming. Like, it doesn't make any sense to me. I don't get it. John says Elon was baiting him. I don't think he was. Like, I don't think that that was an intentional thing at all.
Out to Hitler.
They can include comparisons to Hitler to smear someone you don't like.
Just like Hitler.
Dude's literally turned into the very thing he used to roast other people for.
He is the reference. Anytime you want to say
I
something.
love Bill Burr stand-up. I used to watch it all. I kind of wanted to see what was going on here.
Somebody's evil, you just say he is the next Hitler. Donald Trump, he's the next Hitler. It's always he's the next Hitler.
Yeah.
He died like what, 75 fucking years ago? Nothing quiets a room like dropping the H-bomb.
It's okay when Bill does it.
Just like Hitler.
He still has a job. That guy still has a job.
Bill Burr, anti-cancel culture.
That is weird. I didn't know that. So he literally spoke out against people using Hitler because it's just, well, frankly, dumb. It's a low intelligent argument. Like, if you have to come out and say, like, oh, like, he's Hitler, and you don't have, like, facts to back it up, then I immediately, like, disregard anything you have to say.
Crusader.
It's this kind of hilarious moment, like last year, where they started to try and cancel like dead people.
Thinks Elon Musk should be cancelled for offending screeching leftists.
That guy still has a job.
And that you should never listen to people who've had cosmetic surgery.
Fucking laminated face cunt.
I never attacked him on his look.
That's not surgery. That's a clone mask. Anybody that's paying attention to Twitter knows that Bill Burr died. He was replaced by a lizard person, and they put a face mask on him, and that's why those marks are there. And that's why he's changed his opinion too. Anybody on Twitter knows that that's what's happening. Okay? Golly, how do you guys not see this? You don't see it? For real.
And believe me, there's plenty of subject matter right there.
Let me tell you right now, somebody who has like fucking like Botox face and a hair system, you're going to look at them like, yeah, man. This guy has the answers. It's like, this guy's looking in a mirror like, I don't like the way I look. I reject aging. I reject it.
Fascinating, isn't it, how Bill likes to make fun of Elon's appearance when he's the living embodiment of the soy jack meme. The comedian who routinely skewers the hypocrisy of liberals for their performative activism while reminding you he's married to a black woman literally every
Lizards,
5 minutes.
I mean, vampires.
Look at her, looking beautiful.
There's
Look how
both.
much fun she's having. Oh, this is me looking all glamorous. Fantastic. Look at her.
Became successful.
So is this guy saying that So is this guy saying because he married a black woman, he became liberal soy jack? Is that
by pandering to anti-Trump derangement syndrome, anti-feminist, anti-woke narratives, while literally being married to a woke feminist with Trump derangement syndrome. And admitting that he has to run his own jokes through her purity filter.
Are you married?
Yeah, no, she's the best.
Okay.
She's a saint, and she puts up with me. And I actually run jokes by her.
Do you really?
Yeah, like, should I say this?
Something happened around 2020 that seemed to mark Bill's descent into normie cuckoldry.
I got really into vaccines during COVID. I can't stop getting them now.
It's just fucking creepy.
Can't get vaccine. Can't stop getting vaccines since COVID. Dude, what if the vaccine is what changes? That's what happened. I got it, guys. The vaccine turned Bill Burr into a lizard vampire, and then they put a mask on him. That's what happened. He's addicted to vaccines. Can't stop getting them. I don't know. I just like vaccines. Dude, snorting vaccines out of a hooker's ass.
You have guys like Mayor Garcetti be in charge of telling people whether or not they get to work. Like, that's not what a governor's supposed to be. That's not what a mayor's supposed to be.
They're trying to look out for your best interest the whole fucking time. There's been fucking assholes.
This editing's pretty good. He went.
And fucking assholes on my street walking around, no masks, you know, not quarantining like the people that come by the houses. You see the fucking, you know, the same people that were going in and out of the house who are not part of their family still going in and out of the house.
You want people to walk down the street with a mask on?
Let's not start this, Joe.
With Anthony Cumia asserting that Burr's wife made him end the friendship with him, at which point his comedy changed and that she runs every aspect of his life. Ooh, talk about cucked beyond belief.
Let me make some noise. Yo, make some noise. Make some noise for my wife.
Even as he's trying to impress her by attacking Elon on his podcast, she's humiliating him.
That idiot Elon Musk.
Oh.
That guy, like he's going to, like, who evidently is a Nazi.
You can take him on.
Why do liberals just sit back and not, they have nothing?
What are you doing?
This.
The lean never lies. The media's response to this was an interesting exercise in how they frame the narrative. Thanks to Ground News, the sponsor of today's video, I can instantly access every
Ground
story
News
on it published worldwide and compare coverage. The right largely avoided this story with much of the...
Isn't it kind of funny that, like, everybody is kind of in their own echo chamber, though? Like both sides.
And look at how they presented it. Bill Burr tore into Elon Musk. Bill Burr just destroyed idiot Elon Musk. Bill Burr tortures idiot Elon Musk. They present Burr's spat with Musk as a devastating victory, completely ignoring the fact that it's riddled with hypocrisy. And it's basically just a glib ad hominem attack. Ground News helps me track all this and shines a spotlight on misleading narratives. I use Ground News every day, and not just because they sponsor me. It's genuinely been a game changer. It helps me see through the bias, cut through the noise, and think for myself. You can check this out.
If both sides say the same thing and you're just getting a mix of both sides, then you're really just still getting the same thing. It's the base topics that you're allowed to talk about that they let you talk about. You can argue a point of view from either side of those, but as soon as you go outside of those topics, you're not allowed to talk.
For yourself at ground.news/PJW. The link is down below. Sometimes I feel overwhelmed while scrolling endlessly through social media sites, trying to figure out what's important, what's actually new content and not old news.
Well, Hawk, here's the thing about crypto now. The fact is, a majority of crypto projects are no longer what they are intended to be. And so the ideals of crypto, like, let's say, like libertarian views behind cryptocurrency, like Bitcoin, they're no longer regarded, and therefore cryptocurrency has lost its way. And because of that, you will have people that condone the violation of your personal sovereignty and rights and promote cryptocurrency projects that deliberately do that. And that's what's happening. Because the only point of crypto now from their perspective is to make money.
But Ground News helps dissipate all that clutter by giving me access to what matters in a clear format all in one place, helping me stay informed of breaking news developments as they happen, and more importantly, highlighting what the media isn't covering, which could lead to blind spots. Ground News is essentially the Spotify of news, and I've found Ground News to be an invaluable tool in helping shape my daily news digest. So it's never been a better time to check out ground.news/PJW or scan the QR code.
I haven't used ground.news. I don't know if it's good or
off
anything.
the Vantage plan, which is the one I use for
I've never
unlimited
watched
access.
this guy
Crucially,
either,
they're
by the way.
independently
But
owned
his
and
editing's
subscriber
on
funded.
point.
So please support their mission to hold the media
Don't
accountable.
scan QR codes.
Ground.news/PJW. Yeah, when your new
Just
material
click the-
gets the
I don't know,
Hassan
don't
Piker
click links
seal of
either.
approval.
Naya has been fucking awesome.
Have you guys seen this Hassan guy? Like, I don't understand how he's not banned. Like, he was calling for the murder of people. I don't understand how people are getting away with this. I don't care if he has liberal views or anything, but like, as soon as people start calling for violence, like, I thought we banned those people off Twitch.
Since 2012, she's the best. Nia is the reason why Bill Burr is awesome.
Maybe time to ask who's actually writing it. Burr built an audience by telling edgy jokes about women.
Women are just constantly patting themselves on the back about how difficult their lives are.
Only for him to strangely and surreptitiously change all the jokes to be about white women.
Let's talk white women here, shall we? The woke movement was supposed to be about people of color not getting opportunities, the at-bats that they deserve. And then somehow white women swung their Gucci-booted feet over the fence of oppression.
In his new Netflix special...
I really, honestly, you know, when I saw the shift with Bill Burr, it was the Netflix movie he had. And I remember I was watching with the girlfriend because we like Bill Burr because of all the old stand-up. And then we were watching this movie. She fell asleep, and then she woke up the next day. She was like, I'm going to finish it. I was like, don't bother. Because the movie, like, clearly flipped. And it was like, it turned in, like, the whole movie was him apologizing for everything he's done in his past. It's insane. It's crazy.
Burr based an entire joke on the premise that only white people have free speech in America.
You know why, right? Some people go, well, you know, it's a First Amendment issue. It's a freedom of speech. We have this wonderful thing in this country for white people only called freedom of speech.
Presumably, Bill just didn't watch the news during the entirety of the second half of 2020 and into 2021, while Black Lives Matter was literally burning down parts of cities and calling it free speech, when CNN characterized mass looting, arson, and wanton violence as a legitimate form of First Amendment protest.
Largely peaceful demonstrations.
Apparently, Bill missed all that, or maybe his wife just had a very strong word with him.
What are you doing? And I was just amazed that all liberals had was one day of outrage.
One day of outrage? They've literally been setting fire to Tesla charging stations and invading Tesla showrooms for weeks. Burr's also cultivated this image of himself as a man of the people, urban tough guy.
They went with cheaper leather.
Okay.
I think
You know
who
what I mean?
said it?
'Cause
Somebody said like the Bill Burr is actually on the next level because he doesn't want to be a part of the billionaires that the lower class comes after. The problem is, I think everybody doesn't realize that a majority of the liberals left over are the upper class. Like, so I've noticed a trend. You guys let me know if you notice this trend. The middle class and under, there's like zero liberals left in them. Like there's not like, at least, and I'm in Texas, so maybe that is like, I'll admit the bias, but I don't talk to a middle class or under person that's a liberal anymore. They're all conservative. And all the rich people I know are liberals. I find that weird. And I'm talking like multimillionaire rich, I guess. They're all liberals.
Corporate cunt had to give himself a fucking bonus check at the end of the year.
Sports teams, sneakers, swear words. Rich people bad. He's so edgy.
Free Luigi!
He's such a man of the people that GQ magazine just published a gushing interview with him explaining how Bill Burr became a voice of the people. That's the same GQ magazine that's owned by Condé Nast, a subsidiary of Advanced Publications owned by the Newhouse family, the 13th richest family in America. Because who better to annoy...
No, I just think the left doesn't realize that the lower class has shifted. I don't think that the liberals realize that the pendulum swung in the lower class because they're so detached from reality. That's what I think. Regardless of like my opinions on each individual party. I don't really align with either one, but I just think it's interesting that it seems like they appear to be completely blind to the pendulum switch to the right.
The voice of the people than a business empire with a net worth of $24 billion. They must really have their finger on the pulse of the struggles of the working class. Less a faint whiff, more an overwhelming...
Exactly. I don't think they understand the struggles of the working class anymore.
Stench of hypocrisy.
And I think that's why they're losing.
The kind of hypocrisy that reveals a self-proclaimed anti-woke edgelord hardman to actually be a crybaby Cuck who has a total blubbering meltdown.
But this guy is funny.
And hurts his feelings. If you value what I do and you want to help support
There you go. Help support him. I'll share it out. I never watched this guy before. I just thought it would be really funny to play a video title that said America's biggest cuck after watching a red panda mining video. About Kaspa. I'm sorry, dude. It was really funny to me in my head. So I did it. Let's see. I think Red Panda sent this over. Let's see if he hacked me with this investing article. So we were talking about Kaspa earlier, and Red Panda sent this over. So this is an article from investing.com, and it says an Israeli startup launches the first no blockchain digital currency. A new cryptocurrency enters the crypto market. This is from April 26, 21. And it says one of the researchers behind the Ghost protocol, which was part of Ethereum's original roadmap, founder and CEO of DAG Labs, debuts Kaspa, a new digital currency network. Sampolinsky says that Kaspa implements an upgrade to the technological concept of Satoshi Nakamoto's proof of work, which stands at the foundation of Bitcoin, creating a DAG, a branch chain of information that, as opposed to a regular blockchain, can handle almost limitless speed of blockchain creation. Investing learned that Kaspa will be launched as a testnet, allowing researchers and developers to test the network's capabilities. Mainnet will be launched in the near future, thus becoming the fastest proof-of-work cryptocurrency network. So it goes on to say that they raised the $8 million from Polychain and Accomplice. We've talked about this multiple times, so you guys can watch those videos if you're interested. I don't think we need to cover that again. The company is headed by Sampolinsky and Turkel. Anyways, and then this is the interesting part that he was talking about. Gotti Glickberg, former VP at Bitmain, also joined the leading crew recently. Kaspa's protocol is based on Sampolinsky's. Okay. But okay, so if Bitmain was in on it this early, why did Ice River come out with it first? But yeah, maybe it is a shovel selling scheme. I mean, obviously, BlockDAG is valuable. The speed of Kaspa is valuable for proof of work. Not gonna like. Yeah, I don't know. I got a lot to think about, boys. We'll save this for tomorrow. It's getting late. But thanks everybody for watching. Be sure to hit the like, comment, subscribe, and notification bells down below. I love each and every one of y'all. Let me know what you guys think about my thoughts. I'm going to be thinking on this dilemma for quite some time. I'm sure we'll have a clip of the beginning of this show for you guys to rewatch. But BitGen owns Ice River. Snarks. We talked about it in a video last week. They just went public in the US. I'll see you next Tuesday. Stay righteous. Something like that. I gotta come up with like something more fun too. Peace.